Okay, so starting with, here is the topic, disclaimer. So give a preview of this for the coaching special we're doing for this week, ending on the 17th. Anyone wants to learn these strategies, it's six option strategies, and we also have the future strategies. But this discount is through Wednesday. So let me know after the presentation if you're interested, and we can set something up. We can talk about it, make sure you know all the pros and cons and what to expect, and then we can get into it a little bit more and get you ramped up. The time of year that's absolutely the most profitable is coming up. That's the second half of the year. So that's when we want to get all this stuff down right now to be ready for the September, October timeframe. That's when we have some of the biggest trends and most profitable opportunities. We're profitable throughout the year, but the biggest trends happen then. So that's why we want to gear up now, learn these strategies now to be ready for that when that end of year comes and the first part of the year. October through April is when we usually book the biggest profits with these strategies. So that is the time to be ready. So now is the best time to gear up, learn them, and be ready for that time of year. And we'll be looking at seasonality very momentarily. These are the sectors we trade with options. Okay. We got this particular list of ETFs because these have enough option volume and open interest to be able to accommodate our trades. There are hundreds and hundreds of ETFs, but the majority of them either don't have options or don't have enough option open interest to be able to trade realistically. So you don't want to be like the only human being trading an option or an ETF. That's bad. You can get in, but getting out is going to be a bad experience. So today, I usually take a look at one of the major indices, the Dow, NASDAQ, S&P. Today, we're going to still be looking at those, but also looking specifically at XLE. XLE is the energy sector, and it was my very first favorite ETF to trade. XLE, the first one I fell in love with, that was literally back in 2006. This became my favorite ETF to trade. I've been trading it ever since. I already know that if I give options 1 month of time, it's going to be 85% winning trades for one of the strategies we're showing you. And if I give it 2 months of time, it's going to be 94% winning trades with the one strategy we'll be going over. I know, and knowing those numbers is going to be key as we'll be going through in a little bit. All right. So let's take a look at what markets are doing and a seasonal point of view. This is a weekly seasonal composite chart going through 30-something years of data for the S&P 500. And this is also available at seasonaltrader.com. So that's the way where you can find this. So as a way we get buy and sell signals all the time, but there are times when you get a buy signal and it might go against you for quite a while, or you get a sell signal that goes against you for quite a while, and that money's tied up for that amount of time. And they might eventually become winners, but a good way to maybe fine-tune a little bit when to take the long trades and when to take the short trades is by knowing your seasonality. So the seasonal charts is great for that type of thing. Like if I wanted to let's say I got a sell signal, this is May and June. Let's say I got a sell signal on one of my strategies right here. It could eventually be a win, not an issue. However, if I got a buy signal, the odds are I would have a better advantage on the upside than on the short side, okay? It doesn't mean the short will be a loss, but seasonally, historically, at this time of year, the market tends to have a bullish bias more often than not. So if I saw one of my strategies give me a buy signal at around this time frame, I am more likely to take a long trade than I am to take a short trade at this point in time. Okay, because I'm familiar with the seasonal chart. So this is something everyone can access as seasonal trader. And there are other seasonal programs also. So this is not the only one. We've got a few new people coming in. So please check the chat window for the link to where I have the handouts to that page. Did it go through to everyone? No, just make sure I get it to everybody. Okay, so the link is in the chat window for the handouts. So recently we got a lot of buy signals, and this is the beginning of July, the first half of July. So this is when would have been a great time to establish long trades. And for those of you who trade our strategies, you will see that we got buy signals all in this area, and kaboom, you've seen the first part of July, and it fits the same pattern of it's a definitively bullish bias, and that is exactly what we're seeing. If like in the next week or two, we get buy signals, this will be right here. They may eventually be okay. However, in the short term, the long side seasonally is not optimal. So if I'm picking and choosing where to put my money, and which trade to take or not trade, which trade to pass on, because you can't take every single trade. There's too many trades to take, and have money tied up. So if I got a buy signal right in this time frame, which is basically next week, the third week of July, I would pass on those buy signals for the time being until maybe later in August or September, or depending on when I see my seasonal patterns. Because we tend to go into if I got a sell signal next week or the next 2 weeks, I feel better about taking a sell signal and getting short by buying puts, because going into end of July and mid-August, there tends to be a pullback. Okay, so this gives me a chance to increase my probabilities of getting a good positive results without having money tied up with trades going against me, and maybe potentially those turning into a loss. But using this, our strategies alone are 80-90% wins, but those 80-90 become a whole lot higher even just by understanding seasonality. And like I said, if you go to Seasonal Trader, you'll be able to access the seasonal charts, and then you can kind of layer this knowledge on top of our strategy. Our strategies will give you the very specific days to enter a trade and targets and so on and so forth. But the seasonal charts give you an overall big picture time of year bias, and you'll see different markets. There's not just S&P, there are different markets all within that website. All right. Along the way, if you have any questions, go ahead, stop me. Just unmute, ask a question, or type it in the chat window, and I will respond to you there also. All right, moving on. Myself and Becky live and die by stats, by numbers. Okay. I asked Becky to put together the win-loss stats for all of our ETFs, and kind of sort them out into different groupings, which you'll see a little bit later. In the handout, we focus on the Dow, NASDAQ, and S&P, but we track every ETF on that listing. With the 6 strategies we trade, we track every trade signal on all of these ETFs going back from the time the ETF was either created or the year 2000. So starting in the year 2000, some might be 1999, all the way up until now, every single valid trade for every one of these ETFs. For the stats, but for this handout, I asked Becky to detail everything since 2019, but we actually have all data going further back, but this is just for so people can reference it in detail, because we can make this very public. Nothing's hidden here. And this information is on our website for the trade date, so you can go back and verify them yourself also. So we always traded all the ETFs. Coaching clients trading all the ETFs. Let's have a question here. I'm new to options. How do you know buy signals? We'll be getting into that in a little bit, showing you one of our strategies, 1 out of 6 of the strategies, and then you'll understand that. And then it'll be like, wow, it can't be that easy. Yes, it can, but someone has to show you. I personally don't believe in doing the black box thing. You just buy a trade signal. No, I believe in showing people exactly how to do it and how to do it themselves. Not be reliant on other people to in any way, shape, or form. Other people can cease to exist at any point in time. Their business can go away, their trade signals can go away, but the knowledge you gain to know how to trade this, you keep. And that's what I believe in, teaching you how to do it. The people I learned from, a lot of them don't teach the details anymore, because somewhere along the way their status changed, meaning they became certified professionals, and as certified professionals, they are not legally allowed to show you the details anymore. They can sell you trade signals, but they can't tell you how those trade signals were generated. Legal stuff. But luckily, I learned from these people well before they got certified. So those were, luckily for us, we kept all that knowledge and then incorporated that knowledge into all of our strategies. So we're focusing right now Dow, NASDAQ, and S&P, and I'll show you a few other things. But we did this presentation end of last year, and I showed that if we focus on the Dow, NASDAQ, and S&P, these give us our absolutely best trade results. All right. And so for this year alone, just trading these 3 indices is 91% winning trades. Okay. Or excuse me, this is 91% winning trades from 2019 through 24, just trading the Dow, NASDAQ, and S&P, DIA, QQQ, and SPY, and that's just buying calls and puts. With 91% wins, you make money. And when I show you some ways to turn a 10 to 20% return into a 50, 60, 80% return, then you'd be like, wow, is that it? Yep, it's that simple. And it's a thing called patience. The more patient you are, the more money you end up making. The more eager you are to get in, you'll be profitable, but not as profitable as the person who's more patient. I used to use the specific words, the less you care, the more money you make. And that is very accurate. The less you care, the more money you will make. If you're really just chill, relaxed when it's time to get into a trade, you end up making a lot more money. As long as you follow certain rules. It's not just willy-nilly, no, you got to follow certain rules. You follow the rules, I tell you how to do it, and it'll work out for you. Okay. So, but these are our stats for Dow, NASDAQ, and S&P 2024 so far. We have no losses up until this past week. We've booked 0 losses. 2023, 87% wins. 2022, it was 81% wins. 21, 95% wins. 2020, 93% wins. This was also one of our most profitable years with futures and with options. And 2019, 93% wins, just trading these ETFs, the Dow, NASDAQ, and S&P. These are the biggest ones. These give you the best, tightest spreads, penny-wide spreads between the bid and the ask. So if you're able to afford to trade them, these give you the best results. But not everyone can afford to trade DIA, QQQ, SPY, because options can be a little bit on the expensive side depending on how big your account is. So that's why we also provided stats for XLI and XLK. So we have all the individual stats for each symbol also. But XLI and XLK, XLI is the Dow Industrials, okay? XLI is the Dow Industrials, and XLK is a tech sector. They're both about 90 something, about 93% correlated with the index. So XLK is about 93% correlated with QQQ, and XLI is about 90 something, also 90 something percent correlated with DIA, the Dow. So these are alternatives to trading the higher priced ETFs. Once again, stats are pretty good. Not quite as good as trading the DIA, SPY, and QQQ, but still pretty darn good. Okay, so if you can afford it, you trade the big boys. If you want a little bit smaller account size, then you trade these. So it's very flexible. Okay, and I put a in here is minimized listing. The full listing from trades is on our website, and you can download the same page as for the handouts. This listing is there in its entirety, so you can download all the trades and verify them yourself over the last couple of years. And it's 6 strategies we trade up and down. Some people ask, how come you can't do everything with one strategy? Well, one strategy can't find a market bottom and then use the same strategy to find a trade once the trend has been established, and so on and so forth. And one strategy can't find a market top and then use the same strategy to find when. So different strategies find trades at different points in its movement. That's why you can't just trade one strategy for everything. So we trade markets up and down. So that's the way we've always been doing it, and that's what works for us. So there's always something going on. With the market at the top, we're looking for sell signals, or we're looking for continuation buy signals. If the market is at the bottom, we're looking for sell signals or continue, or we're looking for either buy. If it's at the bottom, we're looking for a buy signal, or we're looking for a continuation down. And those are different types of strategies we have where we find different trades at different points in this movement. And finding market tops and market bottoms is not that hard. It really is not that hard. You just need someone to show you how to do it. And once they show you how to do it, you're like, wow. And that is going to Peter's question. New to option trades, how do you know buy signals? Okay. So myself and Becky and all coaching clients we have are technical traders. We use the charts. I couldn't care less about why anything happens. Don't care why anything happens. Um, Everyone always tries to sound really smart after they read the news after something happens. Oh, it happened because this, or it happened. They don't know. They literally saying what they heard someone on the news say, or some blog say, or some podcast say that day. There's stuff happening all around the world and at any given moment, influencing every market in every way. And so just saying what they happen to be saying on the news that particular day, that 1 out of 1,000 things that are actually going on. No, there's a lot of stuff happening that influences markets, and we don't know or care what, why, or when. The charts tell us what we need to know. Okay, so that's why we spend so much time on technical analysis, and this is our bread and butter, which we've been doing since 2005, and it works for us. It works, it works, it works. Okay. Now, I'm going to switch to the charts. And if we have any questions, I'll come back to the handout in a little bit. But if we have any questions, please stop and ask or type it in. I'm going to change the share, and we're going to go to the chart. Okay. And now we're looking at a chart of XLE, the energy sector. Today, instead of looking at the chart of the Dow, Nasdaq, and S&P like we usually do, I'm going to go back to my old, long time, first favorite sector, which is energy. And we're going to trade one of our strategies. Pull it up real fast. Limit X3. I'll show you the trimmed down version of the strategy. Some of you have seen it, familiar with it. Okay, this is Donchian cross. It's a buy setup using a Donchian channel, and you'll see all of our trading plans. There'll be an actual full trading plan. We'll start out with all the trade settings with all the chart settings. So if you have to set it up manually, you can do it on your own. Otherwise, I will give you the charts already set up. Either using Thinkorswim, I will give you the Thinkorswim chart already set up with everything laid out for you. Nothing for you to really do. It's ready to go. The charts we're using today is NinjaTrader. If you're using NinjaTrader, it's free to use, great analysis platform, and very easy to use. And I will give you all of that set up also. But I will hand you all the charts already set up. But the first part of the trading plan will show you all the settings. So if you need to set your chart up on your platform manually, you can. Then we do some terminology learned from Jake Bernstein. Setup, trigger, trade management. The setup will be visually what you're looking for. The trigger will be something on the chart to confirm the setup. And then the trade management, I have it really summarized here, but this is the stuff that this is trading. The buy, setup, and trigger, this is your technical analysis. This is your technical analysis. This is not trading. This finds the opportunity. The setup and trigger is what is finding the opportunity. Once you find the opportunity, then you actually have to know what you're doing. I've seen people that learn every technical analysis in the world. Myself and Becky, we know some people who literally spent 20, 30, $40,000 acquiring technical analysis packages and books and everything else. And they never actually learned how to trade. They thought technical analysis was the end all be all. And then as long as they learned that, they're going to be, no, you actually have to learn to trade. You have to know how to allocate risk. You have to know which option to choose, how much time. There are hundreds and hundreds of potential option strategies. If you choose to be a spread trader, well, you better choose the right strategy or grouping of strategies and also know how to make adjustments if you're going to be a spread trader. Because that's knowledge you have to have. And what's the risk? If you take a loss, have you accounted for all the variables? What if your profit objective is met within an hour of placing a trade and you have a spread on? What are you going to do? You have a guaranteed loss, but your profit objective is made. That's trading spreads. What are you going to do? So we are pure directional traders, calls and puts only. Everything we show you is based on buying calls and puts, no spreads. I asked when we were working on these strategies way back when, I asked some of the best spread traders I knew to take my strategies and evaluate them. Tell me if they could come up with a spread strategy that would be more effective at profiting from these strategies than just buying calls and puts. And I gave it out to the best people I knew. And John knows those same people, are the same people in the SBAR group we've been working with, people like PJ, and gave them and all the strategies. Like PJ is like, hey, check this out for me and evaluate it, see if you find a better way. And it was like, no, just buy calls and puts. Sometimes you just got to buy calls and puts. That is the way to go. That's the best optimal strategy. Okay. And that's what we do. We just buy calls and puts. We're not doing any fancy analysis on options. We are not looking at risk graphs. There's no risk graphs. That's only for all the spread stuff. All of our analysis is done on the underlying ETF on the chart, and then we use options to capitalize on the opportunity. Now let's go ahead and get back to the chart. And some of you are familiar with this, what's on here. This is the Donchian channel mean line. The Donchian channel actually has 3 lines. But the other 2 we're not using. We're just using the middle one, the mean, the average. This is a 40-period simple moving average. And this is upper Bollinger Band. Bollinger Band has 3 lines, upper, middle, and bottom, but we're not using those. So I just want to show what we're actually using, the upper Bollinger Band, the Donchian mean line, and a 40-period simple moving average. Here we have a squeeze and we have volume. Between These all get used at some point in time between our 6 strategies, but we're only going over one strategy today, the Donchian cross, which will not use the squeeze and will not use volume. It will use the orange main line, the 40 period moving average, and the Donchian line. Excuse me, the Bollinger Band. All right. Any questions up to this point on anything? All right, someone pull out a calculator. We're going to be using it. I'm going to ask you to do some numbers for me. All right, so what we're looking for, the setup, visually. So we asked about setup now. This is for Peter. How do we find a buy signal? For this strategy, I'll let you know ahead of time. For XLE, given an option 1 month worth of time is 85% wins. Given an option 2 months worth of time, it's 94% winning trades. That's all provided to you in our trading plan. We're looking visually, we're looking for this orange line to cross above the blue line. So let's say today was 212. We look at our chart after the market closes. This is not real time. We do our analysis after the market closes. There is no sitting in front of a computer going up, down. No, this is not day trading. Okay. This is not day trading. We all have lives and things to do. Jobs, lives, family. Been there, done that with the sitting in front of a computer. We've evolved so way past that now. Okay. This is where you evolve to be, not where everyone starts out day trading. This is like the end game. This is where you get to after you've been trading for a while and it's your goal. All right. I'm going to put into the chat window again, the handouts links. Okay, so it's in the chat window. That link is where the handouts are. So this day, and here's literally our analysis. I might go through this ETF and I see this is 2.8, and I see, oh, the line didn't cross. Oh, 2.9, line didn't cross. I got it. The analysis takes that long. What I'm visually looking for each day is that orange line to cross above the blue line. Nope, line didn't cross. Next ETF, next ETF, next ETF, next ETF. Orange line didn't cross. Hey, wait a second. I think the orange line crossed. I'm not really sure. I can't really see it. It's kind of in there. So here is where you look at the data box on the left. The data box, it's color-coded so that the colors match the chart. So we're looking at the blue line and the Donchian mean orange line. Look at the values. On this day, the orange line, 82, is less than 83. So on this day, the orange line is less than the blue line. On this day, did we cross? Because it's hard to tell by looking. 83.52 is greater than 83.4. So on this day, we had our bullish crossover. That is the setup we are looking for. That is our trade signal. Other criteria, it has to close that day below the upper Bollinger Band, and there's a certain number of days we have to be in this bearish cross. That's it. Once I see this cross on XLE, I now know that if I buy a call option at the open price the next day or lower, then if I give it 1 month worth of time, I have 85% of the time, my first target will be reached. And if I give it 2 months of time, 94% of the time, my first target will be reached. Okay. Pros and cons to time. Less time, option costs less, and you get a higher percentage return because you're paying upfront costs are less. More time, option costs more, your percent return will be lower, but you'll have fewer losses. You make a business decision which you want to do, okay, when provided the information. That's one of the decisions you have to make as a trader. So let's take a look at this now. On this day, the ATR, right here, average true range, ATR is $1.47. I said we don't do analysis on options. We do analysis on the ETF. Our targets are not based on options volatility. They're based on the volatility of the underlying ETF. ATR tells me average true range that on average, I use a 5-period ATR. So every 5 days on average, Excelly is moving $1.47. Okay. So I'm going to use that as my first profit objective, $1.47. After $1.47 move in my direction, I take profit. Okay. Depending on whether you choose 1 month worth of time or 2 months worth of time, you're looking at a 10 to 20 something percent return at the first target just by doing that. And from that point on, then you can trail stops on, take part of your position off, trail stops to capture more profit. Okay. But some people just take the first target and go. That's it. And that's fine. So I'm going to show you the worst case scenario where you make the least amount of money. Okay. And then we'll show you another case scenario with the same type of trade, but where you can double, triple what you would make on this trade using the exact same approach, but being patient. All right. And this is something patience gets learned along the way. So I take this. So now if I were to go to my option charts, an option is going, a 1 month option is going to be worth the cost about $2.50 maybe. 2 months worth of time is going to be about 3 something. All right. So let's just take a look here. I'm entering this trade at or below the open price of the ETF the next day. So look back at the data box here. The very next day, I'm entering this trade at or below the open. So the ETF opened at 83.99. So I am buying 1 strike in the money. I can either get the 84 option or the 83 option. If it opens right at 83.99, right there at the money, I can get that 84 option, or I could get an 83 option. I always try to go right at the money or 1 strike in the money. Okay. We do not buy out of the money options ever. No out of the money options. So open 83.99. Let's say I'm buying the 83 strike option or 84. Let's go over. Since it's open right at the money, I'm going to buy the 84 option since it's open right at the money. Okay. Now, on this day, my ATR, the $1.47. What's the dollar? This should be an easy math now. It opened at 83.99. What's 83.99 plus $1.47? 83.99 plus $1.47 is what? 83.99 plus $1.47 is that 83.54? No, it can't be. So 83.99 plus 1.47. 83.99 plus 1.47 is what? Nicholas, I think you have a typo in there, I think. That 85.46 is what you meant there? $85.46. That's our first profit target. Okay. So we have our buy signal. Our entry is at or below this open price. We don't buy when the price is above the open. We wait for the price to be at or below the open price, and then we buy our option. The very next day, what was the high? 85.86. Our first target is hit within 1 day. With a big, strong move like this, you're looking at a 20 to maybe 30% return when it's that fast and that strong, a direct move up. And these are the type of moves that it didn't pull back. So it's going to hit your target and keep going. So there's an opportunity to actually trail stops. Like if you take part of your position off and trail stops, this is the type of trade that can get you a 60, 70, 80% return on your money. depending on how you trail your stops. It just depends. Okay. Or you could just grab all your money on the first target and be done. I know people who think that, oh yeah, I want to trail all these stops, I want to do all this stuff, and it doesn't fit in with, they might think, oh yeah, I want to make all this money, but here's a reality check. It doesn't fit your personality and or it doesn't fit your lifestyle. To trail stops and do all this, you have to be a position manager and deal with it every day and be detail oriented, not make any mistakes, and be able to track which is this option belonging to this trade or is this option belonging to that trade. And it sounds really good, but you have to learn your personality and lifestyle and if it's conducive to that type of trading or not, because otherwise you're just going to mess yourself up. So some people are good at that, some people are not. But that's a learning experience by trading and then figuring out what works for you and what doesn't. I just made it sound really easy, and it really is that easy, actually. So some people who get in, they'll valid trade this day. They'll try to get in somewhere near the open, and then they'll get in the trade and done, no problem. Okay. I have evolved to a point where I would not have taken this trade this day, and I might have missed this one, but I might catch other ones. Okay, for bigger profits. So let me show you. So any questions on this right here? What time frames are the SMAs? It's a 40 period. This is a 40 period moving average, and this is the Donchian mean. So there's a 40 period simple moving average is the Donchian mean line. So we got our setup. Our is the cross. That's visually what you look for, the setup. The trigger is how long was this in a bearish cross with the orange line below the blue line, and part of the trigger, did it close below the upper Bollinger Band. So we got to set up a trigger valid. Once we have a set up a trigger valid, we go to our trading plan. What are the stats? Are they worth trading? If it's under 84% wins, we don't even consider it. It's not given any consideration if it's under 84%. All right. And then you get into trade the next day at or below. It could be, it doesn't have to be the next day, but at or below the open price of the ETF. And you set up a conditional order to sell your option, sell to close your option when XLE reaches at or above the target price of 83.46. That's it, and you walk away. Good till canceled. That's how we place our orders. We buy the option. Option is now sitting in our account, just a call option sitting in our account, and then we place a contingent order to sell to close at market, sell to close at market, the XLE contract on the condition when XLE goes to at or above 83.46. Good till canceled. That's it. We walk away. There's nothing else to do with that trade. It will either be a loss or it'll be a win. If you plan to be taking only part of the position off of the target, then you have a little more work to do. That stuff I go over with you one-on-one. So you got to have a process for that to keep track of that. And it works extremely well. Let's take a look at another XLE trade, same setup, but more like how I would trade it. That's based on evolution. Back in the day, this is what I would do. I'd be getting in right here. As I've evolved, there's a good chance I would have missed this trade, but a good chance I would have taken this trade. Okay, take a look at this. Looking for the orange line to cross the blue line. Nope, nothing, nothing. Hey, orange line crossed the blue line. Okay, it closed below the upper Bollinger Band, and the criteria for a number of days, this was orange line was moving average is fine, it's good. I now know, once again, I have an 84%, 85% chance of a good trade if I get 1 month worth of time on my option. 94% winning trades if I get 2 months worth of time on my option. And that's not calendar months, that's expiration cycles. So I need to go over that with you in detail. People I'm working with, so you really understand that it's not just calendar months, it's expiration cycles, option cycles. All right, so the normal standard entry for most people, they're going to be getting in right here at or below the open price this day. That's the entry price. And your target is, okay, let's go ahead and put some numbers here. Target is $1.63. That's the ATR for that this day, 163. The open price is 85.42. So what is 1.63 added to, so 1.63 added to 85.42. 85.42 plus 1.63. 85.42 plus 1.63 equals what? And that's 87, is that 05? Okay, that's our first target. We enter the trade here. Our first target is right up here, 87.05. Okay, what happens the next day? Oop, goes against you. You're in the trade. You got in the trade somewhere here, and it goes against you. Here is where I personally will start looking for a trade. I do not rush to get it on day one. I'll be looking for this. Or if I'm not caring at all, hey, even better, even better. Move this over a little bit now. Becky does the same thing also. Looks for when trades are going against her, that's the opportunity to get in. So if I get in here, eventually goes my way after about a month for 2 expiration cycles, 2 months. It'll be a good trade. You probably booked a 10, 20 something percent return. Not a problem. You know, it'll go against you. You're going to find your option decays to like just drops in value. Then it comes back to life again. But here's the difference now. By being patient and not caring as much about not rushing, I don't really care. If I miss a trade, great, but that comes with time to have that type of calmness about missing trades. I'm at a point now I don't care about missing trades because opportunities exist all the time. So I might get into a trade usually after a big down day. So I would have been entering this trade, let's say that open price was 85.42. This day it closed 3 points lower. Okay, 3 points lower. Here my target was $1.63. $1.63 point from this point. Between this day and this day, it dropped 3 points. I can get in here. And instead of my target now being $1.63, my target is now $4.63. Same trade. My target stays exactly the same. My target stays exactly the same. I still have the same 85 to 94% probability. Actually, with 2 expiration cycles, I still have the same 94% probability of success of hitting my target. Except now my profit objective is so big, I don't even have to worry about time decay. Okay, why 463? Because I'm getting in. If I was entering the trade at the open the next day, the open was 85.42. By not taking the trade that day and getting in after it's dropped a bit, it's dropped to 82 something, 82.52. It dropped 3 points. It dropped 4 points. It dropped 5 points. So I'm getting in 3 points lower than I was originally expecting. This is the original entry for the trade up here, but then it dropped 3 points. So my target, the dollar, my original target was $1.63 from this open price right here. But I'm getting in 3 points lower. So 3 points gets me back up to here, and then $1.63 added to that, so $4.63. If I'm getting in 4 points, 3 points lower, now my target can be $4.63 rather than $1.63 because I'm getting in at a much better price than expected. My win-loss probability doesn't change because the trade goes against you. It just means if I were to get in down here, I'm going to have a much. You see, here is where if let's say this kept dropping forever, if this trade was meant to be a loss, it's going to be a loss, okay? If this trade was meant to be a loss, it will be a loss. Here's the difference, though. If this trade is meant to be a win, this win getting in here might have got me 10, 15% return, maybe 20 if I'm lucky. Getting in here, now that 10, 20% is now 50, 60, 70% return on my money just at the first target without trailing stops, just first target, 60, 70 something percent return. That's the difference. You're getting in, if I got in down here, and this is what we do all the time, myself and Becky, see, okay, we go back and see what trades are we not in? Which trades are we not in? Because you can't be in every trade. So you go back and see, okay, we're not in this trade here. This was valid way back in and it dropped. That we didn't get in that one, but hey, it dropped. Let's see about getting in. And you don't have to go all the way back to here. You can get in here. Now you have flexibility. This was entry was at 85.42. Down here, you're at 79. You've dropped more than 5 points. Okay. I can have a 2-point target and take profit. I can have a 3-point target and take profit. I can have the full 5 point something points and take profit. You have flexibility, what you can do and how you can actually turn a 10 to 20% return into a 60, 70, 80% return with the exact same amount of money. The difference is your risk is the same no matter what, except your profitability doubles to triples, quadruples. Okay, this is more how I trade now. This is the evolution. And it's called being patient. Literally being patient. You don't have to get in. If you get in the next day, great. The market could open the next day and take off and you miss the trade. Big deal. If we go back to the little one we looked at previously, same strategy. If you didn't get in this day, you're going to miss the trade, basically. You have 1 day to get into trade anytime this day, and it opened lower. You had maybe 1 day and maybe a couple hours the next day to get into the trade before it took off. This one, same strategy. You had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30, about 29 days to get into the trade. 29 days to get into the trade. You could have got into this as long as you are at or below this open price and the first target has not been reached yet, the trade is in play. It doesn't matter if it goes against you. The 85 to 94% of the 2 expiration cycles, 94% is still in play, except your profitability changes depending where you got in. So if you rush to get in, you're probably going to make some money, but it won't be a big amount because it went against you so much. Unless you get a big gap or something, it won't be that big a profit. But if you were patient or just luck, you had other things going on, missed the trade, you allocate your money somewhere else. I think, but you see, you go back and look and see what trades am I not in? I'm not in this one, and let's see what I can do. And there are other things you can look at in a chart to give you some ideas of when to actually take the trade that I can go over with you as a coaching client, because there are other things literally with other stuff here that can give you like a heads up. Okay, hold off, hold off, hold off, hold off. Okay, now go ahead and get in. And so there are things on a chart that helps with that also. So it's not just random luck and guessing. You can do random guessing as long as you're below the open is great, but there are other things you can see on a chart, which I show people that you can use to signal now is a good time with an upturn to get in. All right, so like I said, this is just one strategy out of 6. So we trade on this same day. Without going into detail, we would have also been getting short. So this day we had a buy signal and a sell signal on the same day without going into the details. Some of you who know the strategies know my sell signals. We would have been buying puts on the same day we're buying calls, okay? So the puts would have been making money for you all the way down here, and the calls would eventually make you money. But we had both buy and sell signals on there without going into that in detail that I say for the coaching clients. But if you're familiar with our sell signals, we had both. We had a sell signal here and a buy signal. That happens also because markets go both ways. They go up and down. And the probability of success is just the stats and time. Myself and Becky did a lot of work with GAN, time analysis. So we got very good at combining price and time. So you'll always find time factored into all of our futures and option strategies. It's not just get into this price, get into that price. Get into this position within what time, get out within what time. Time's a big factor. So when you can combine time with price, it becomes really powerful. But if you can combine that P word, the patience thing, that's where the money's really made. Scrolling back. You got crossovers, boom, gaps. You might hit a target really fast, and then it can reverse on you. That's why you want to have an automated order. So once you get into a trade, let's say you got in somewhere here, to hit a target here, you really have to have your order in place. I know there are people who have told me, well, I'm just going to watch the market and set an alert so that when it gets there, I'm going to just go in and manually make the adjustment for the trade. That doesn't work. This is real life now. You can't just manually. Some of these trades might hit your target for a minute or two and then reverse and go the other way. So that's why we have to trust our trading platforms to be able to set a contingent order. Not all options platforms are able to do that, okay? There are 1 or 2 professional type trading platforms that will not allow contingent orders, conditional orders. Thinkorswim does, and many do. There's a new one, the new one that a lot of you know, Tom Sosnoff, that Tom created. Tom told me to my face he will not enable conditional orders on that platform because it's the fastest option and execution platform on the planet, and he doesn't want conditional orders slowing it down. So for that type of platform, you can't do these strategies. I've had people who trade on really super professional platforms that don't, because they don't do conditionals. We are retail traders. We do conditional orders. So we need a platform where we can set it and forget it, walk away, and the platform will take care of our trade management for us. A trade could take hours, it could take minutes, it could take days, it could take weeks, it could take a couple of months. We don't want to be sitting there looking at a computer trying to, no, you just set the trade and walk away. It will be what it is, it is. All right, any questions so far, just on maximizing profits just by being patient. And it sounds simple, but it's being patient takes experience and practice to be able to trust, trust the strategy, trust the platform execution, trust that you will not make mistakes, trust your trading coach to show you how to do it correctly. And it takes time. That's why I always ask people working with me to allow at least 3 to 6 months of time getting all the strategies down, getting experience, because especially with options, there are a lot of variables with options that you may not experience until it happens. And you're gonna be like, what? You're gonna get bad fills. You're gonna have low open interest. You're gonna have to make decisions about premium prices. Is this too expensive or not? And those are all guidelines I provide. Because you buy an option that's too expensive, it ain't gonna work. You're gonna just bleed off premium and end up with a net loss before the thing even moves. Okay, so those are all guidelines we established during coaching sessions, especially with option pricing. It sounds good to buy a call option, but you can't just go out and buy a call option unless you're paying the correct price for it to make it a smart trade. Otherwise, if you're just paying much too much time premium for it, then you're you need a bigger move to compensate for it. So this is a balancing act. And that's something I have to go over with you one-on-one. All right. For this particular strategy, the crossover, and remember when we're talking about this strategy here, it went against you, but you can get in down here, and then you have a second trade, the first one we looked at. So you're going to have two trades on at the same time. So this one, you have XLE going on, then you have another one with XLE. So then all of a sudden, they're all hitting up here and cha-ching, and profits happen. Any questions so far on anything? Like I said, everything we do is based upon executing the strategies, 6 of them. Let me go back to the plan just to give you an idea of what kind of the win-loss numbers look like for the different strategies. They're not detailed, just to give you an idea. So this is a trimmed down version of the plan just to give you a feel for what it looks like. We also include all the win-loss stats for each of the options. And what that looks like is, so here are the symbols again. So we don't just do Dow, Nasdaq, and S&P, do all of these. These are stats for 2 of the strategies: squeeze play, sector sell, squeeze play, sector buy. If it's in light blue, it means it's 84% wins or higher. For one expiration cycle, basically, which is 1 month, the 2 expiration cycle, which is for the most part 2 months. Here are the win-loss stats. Okay. So this is what we provide you. This is what we update every 3 months. We update that every 3 months. When I said we, meaning Becky, I do. If you see something in a rectangle box with numbers and stats, Becky did it. I do not put anything in spreadsheets and little rectangle boxes. I do not do that. I hate doing that. She loves doing that. So I like doing the presentation. She likes doing the numbers behind the scenes. She is a database manager. She loves handling numbers and stats. So, and I don't. I like doing the analysis, the technical analysis, and she documents. So when I'm doing analysis, she's documenting the results and that type of thing. So we work together really well. That's why it's good to be working with the group, and everyone's invited to my group on Facebook, and I also email everyone the trades valid every day. So you can communicate with others and not be alone, because it's a really tough thing to do this by yourself. Really tough thing to do is trade by yourself. If you communicate with other people within the group, it helps a lot. You can validate what you're finding with what they're finding, and maybe find a trading buddy to be one-on-one with, and then it helps a lot. Another one of the strategies, T-line buys and sells. You can see the difference between 1 expiration cycle and 2 expiration cycles with the light blue. You have a lot more blue when you have more time. Okay. So if I got a trade on IBB, if I got a trade on GLD gold for this one strategy, this is not the same strategy we just looked at. Different strategy. It's under 84%. I would not take a trade on GLD with that strategy. Okay. EWG, Germany. If you want to trade European markets, this is Germany. If I got a trade valid on EWG, I will not go with one expiration cycle. I will go with at least 2 months worth of time, because one is under 84% wins. This one is 90 something percent wins. If I have, so that goes back from the beginning of the ETF, which is somewhere between 1999 and 2006 is when these ETFs got created in that time frame. This then Becky tracks this, updates it every 3 months, and we hand this out to all the coaching clients, because if you don't have these numbers, you cannot trade these strategies. Got to have the numbers. Another one of the strategies is, once again, this is a short side. Another one of the strategies, long. And this is one of our actual favorites to trade, the hook one. This is our strategy for buying market bottoms. This is the one we specifically use to find a market bottom. This is the one we've been trading longer than any other strategy, period. This one finds market bottoms. It's an Ichimoku strategy. We've traded this longer than any other strategy. Finds market bottoms. And this one is the one we use to find market tops, period. This finds market tops. Okay. So that's a quick peek at just the different groups of strategies and the numbers involved, the stats and win-loss. I have made available on our website. So like I said, everything we do is number-based. And to achieve those same type of numbers, you have to follow the plan the way we show it, not make up your own rules. Okay. You really got to follow the plan the way we show you to follow the plans. We have all the ETFs, but I want to show you like groupings of symbols. Some people really like to trade metals, gold, silver. So if you trade the metal ETFs, that would be like this grouping within our 28 ETFs. GDS, gold miners, gold, silver, and metals and mining. These are the 4 metals ETF. This is a whole listing of the trades over the last several years, win-loss status. Okay. We had our losses, couple losses in 22. This is your summary. Okay. This year we were at overall 84% wins over the last 5 to 6 years. Okay. Remember what the DISPY looked like? 91% wins overall. Gold Star, 84% wins overall. As long as you're consistent, you make money. If all you care about is making money, you focus on the Dow, Nasdaq, and S&P. This gives you your absolute best results. If you want to trade for entertainment, excitement, you want to trade all these different markets, that's okay. But when you get a loss over here and a loss over there, picture this. Trading Dow, Nasdaq, and S&P, our last loss was a while ago, middle of 23. But if you're trading other things, then you filtering in, you might have a loss here on something else. You might have a loss here on something else. So suddenly you deduct from your profitability from one set of grouping of strategies by trading something else. So this is something myself and Becky had to evolve and learn from also along the way. It's nice to be able to trade everything, but if you get more focused, then you'll see your profitability go up. And by being able to sort through, that's why we provide the spreadsheets. People can sort through this themselves and objectively decide what they want to trade. So if you want to trade metals, know that it will be an overall lower percentage than just trading indices. Some people like trading energy stocks. That's great. I like that also, like XLE. So we did a little grouping, and you can do your own groupings. We just provide this you have everything. You can provide your own groupings and sort through it however you want. And you can see it's 80-something% wins since over the last 5 or 6 years. And we have the individual stats for each of the different things that are in the XOP, oil, XLE energy, USO, oil, and UNG, natural gas. There's an energy ETFs, and all the stats are here. All the trade listing is here. But if you're trading everything, are you trading energy, you're going to pick up some extra losses here and there from this or that. But the best results are still going to be the Dow, NASDAQ, and S&P. And you can sort through this any way you want the list to figure out what you want to trade, but everything is there and all the stats gets presented to you. And that's how we do our trading. And how we maximize profits is, number one, finding the things that optimize our trading, like the Dow, NASDAQ, and S&P. And then also, we know when to enter the trade, but the more patient we get, our profitability goes up. A trade that's meant to be a loss is going to be a loss, okay? If it's meant to be a loss, it's going to be a loss. It happens. But how we showed you with the trailing stops, or not trailing stops, but better entries, that's what turns a good trade into a great trade, because 10 different people trading the exact same strategy, 10 different, I'm going to change the share again just to show you this, why you can't rely on everyone getting great results from something. 10 different people trading this trade signal will get 10 different results. One person, I know people want to get it right away. They want to get it out of the way, get a trade on, and the next open, they don't have to think about it. Just put it on and forget about it. Great. They'll be getting that 10, maybe 15% return 2 months later. There are people who will get in down here that day, later that day. They might get into 25% return. There are people who will get in over here. They might get in that 40% return. People will be getting here, they'll be getting into 70, 80% return. Okay. Everyone is different when you decide you want to actually take the trade and when you get out. Someone getting in down here might choose to get out here and just grab that profit and not wait till it gets up here because you have a very nice profit. So 10 different people placing the exact same trade on the same trade signal will get 10 different results, depending on your decision making and its decision making. I can provide you when to trade, what to trade, how to trade, the whole deal. But when you decide you want to pull the trigger, when you decide you're getting back from vacation here, you might be on vacation when this comes out and you don't get back to it until over here. Even better, getting at a better price. There's a lot of different variables in everyone's day-to-day life. You may not have enough funding available right now to take a trade. You may have to wait for money to transfer to get a trade, and while you're waiting, if you had this trade and you were waiting for the money to transfer, you missed the trade. If you had this trade and you wait for money to transfer, you get a really big profit. Luck of the draw, it could go either way. So all these different variables, but bottom line, you got your setup, your trigger, trade management, at or below this open price. That's it. Very objective, but to maximize the profits, patience, patience, patience. If it's going against you, some people can be patient up to here. Great. This 10 to 15% return getting in down here is going to be 20 to 30 something percent return. Just doing something as simple as waiting a day can literally double your percent return on a trade, because you're getting at a much better price. You're going to be way deeper in the money when this target's hit. So different variables. A lot of it is patience. Follow the plan. Follow the plan. Do what I tell you to do the way I tell you to do it, and it works. Don't branch off on your own until you establish a base of successful trades, and then we can start fine-tuning something specific to what you might want to do. But you make this work first, get a foundation, get a routine down, and then we kind of go from there. But you have to commit to at least 3 to 6 months of trading the strategies consistently to see the results, and trust your coach. And there will be some times when you might have 8, 9 trades, some long, some short, and literally every single one is going against you. Long trades are going the wrong way. Your short trades are going the wrong way. And you're like, how can this be happening? And in your mind, you're truly thinking your account is going to get wiped out because you have all this money tied up in your account, and it shouldn't be, because there's only a certain percentage of risk on every trade. So we'll go over that with you also. But you think you're going to wipe out a big chunk of money in your account, and somehow, some way, you don't know how it's going to happen, but I will tell you, eventually, of all those trades going against you, 85% of them will end up reaching the first target before expiration. And I know that because we've been doing it so long, and that's why we have all the stats and history. And you just have to trust the methodology, trust the procedure. And at times it's going to look awful. You're going to be cussing my name. It happens. Like I always hear it. It's like, how can you, patience, relax, let the trade play out. Some people don't have the patience. They realize they can't do this. They just can't. But that's what you have to do and learn to really figure out what your personality is. But if you can do it, I mean, we've been doing this option since 2005. We've never stopped, myself and Becky. We've never stopped. We had our ups and downs, our learning curve, but we got into a groove where this works for us, and it's been good to us. This and futures. I love futures. I love futures, currency futures. We'll do another futures presentation next month, and you're gonna see, if you go to our YouTube page, you're gonna see all the futures presentations there. But futures are just the best. Currency futures, especially because with the currency futures, you can trade a small account and really build up to a bigger account without a whole lot of risk with a smaller account. All right, do we have any questions? Time tends to go by really fast when we do these. Okay, I'm going to switch over to the share in the handout, and also on our website. See our listed coaching special. So we're doing this through July 17th. For the option strategies, it's going to be $250 off our regular price. And if you want to do combined futures and options, it's $750 off, or $250 off either the futures or options, but $750 off if doing both. I don't really put an end time limit on this. It's like, I expect you to be doing a certain amount of work, and within 3 to 6 months, you should be able to do this pretty much on your own consistently. I've had people I've been working with for 9 to 10 years, and they still email me regularly, call me regularly. We still chat. I don't charge them anything for that. Yeah, it's just they want to talk about stuff or verify something. I'm like, cool, no problem. And then I email out the valid trades every day for you to confirm what you found is same as what we found valid. So you don't have to worry about you being on your own. You're never on your own with this. So here's where we help you with everything. In the handout, you'll see the details for coaching. Also, here's the regular price and discount up above. It's all one-on-one. If you want to meet in person in Santa Clara, I'll meet you in person in Santa Clara. Otherwise, it'll be via Zoom. One of the questions, where do these probabilities come from? It comes from looking at every single valid trade that's happened since the let's take this for instance. Let's go back to XLE, going back to 2005. What Becky will do, she will look at the chart. She will see XLE became valid on June 7th, 2005. If Becky had taken this trade, what would have happened? Buy it at or below the open price, good trade. That's literally how all the stats are developed, looking at every single valid trade since the ETF existed. So this would be an example of XLE 2005. So she literally goes through every single valid trade. We do not trust automated scans to find them. Sometimes the data issues. So we literally visually just scroll through the charts and find every single valid trade. And if we're taking this trade, how would it have played out? That's literally what we do. If here it is, valid. If we're taking this trade, how would it have played out? If we're taking this trade, how would it have played out? If we crossed above, if we're taking this trade, how would it have played out? You see this tend to go up, right? Just saying. Okay. That's how we get all the problem. So Becky is aggregating the data. Yes, she's a data manager for a living, and she does this for our business also. So like I said, I don't put stuff in boxes and spreadsheets, but she does everything. Everything you've seen in a spreadsheet and a stat, she does this, and she finds it fun. So I'm like, great, helps me. But that's how we work well together. Um, the stuff I hate is the stuff she loves, and the stuff she hates is the stuff I love. So it works out really, really well. Um, we've probably only added 2 new option strategies in the last 8 years. We added two new strategies last year, earlier this year. That's about it, because of looking for some ways to increase some profitability on some of the short setups. And I'm gonna go to one more share. Then we're gonna wrap it up. Okay, value trades, win loss, and share. On our website, this is the link I put in the chat window. This is where you'll find the handouts. Here's a listing of all the trades over the last couple of years. A few information too, 20 the other ETFs weekly strategies. If you're interested in one of the coaching programs, let me know before this coming Wednesday. You can call me this afternoon or before Wednesday, set up a time to chat. You can use the contact us. So you can either call me, this is the landline. Yes, I have a landline. I have a cell phone too, but I don't put my cell phone out there. Some of you have it, but I don't publish it. You can leave me a message here or call me here, or this is my business, or just contact me, we'll set up a time to actually talk. If you have any questions, concerns, I want to make sure you have a realistic expectations. I only do one-on-one, and a big reason for that, what I've found is, from my personal experience, group settings are not the best to really learn, because I might have to say something that's 3, 4, 5 different ways for someone to understand it. Not everyone understands things the exact same way. So I might have to adapt the words I'm saying or how I'm saying them specifically to an individual for them to get it, because we all have different knowledge bases, different backgrounds. So it's not universal. I have to adapt how I teach, what I say based on people's backgrounds and knowledge. Not everyone's an engineer. Not everyone has a 4-year college degree in science or technology. Okay, so everyone's different. So I have to adapt as to each person as needed. So details are on the website also. So just contact me. As it says, use the contact form on top of the page to request a discounted price. You can pay for trainings here, but you don't get the discount. The discount is not here. This only has the regular price. If you want the discount, then you have to contact me using the contact form, and I will send you a specific link. It will come from PayPal, not from me. It'll come from PayPal. And then you can use your debit or credit card to take care of that. But here are the discounts right here. And it's for each of the programs. So you can go through this on this page. And I'll put the link here also into the chat window. So that's the page where all the details of each program. I said everything's one-on-one, and we'll meet up either in Santa Clara or on Zoom. All right, do we have any questions? I'll answer any questions you have on anything. Just throw it out there. Otherwise, like during meetups, there are no real secrets. So here's your chance to ask whatever you want, and I will give you an answer to it, or I'll have you contact me offline, and then we can chat about it and give you more specifics. Otherwise, this is July now, so probably the second weekend in maybe August, we'll do our next meetup. It'll be on futures. And like I said, this is the time to get ready for September, October for the options, because our biggest, most profitable time to trade is October through April. So this is now when you want to gear up, learn the strategies now, be ready, fine-tune for when October hits. It happens every year. All right. I have a question here. It's six Ichimoku / Danshin, and it's available to everyone. I don't see it on Thinkorswim. Those are not Thinkorswim strategies. Those are my strategies. The indicators, the charts are created by me. I believe, if I recall correctly, it was, let's see, one of the people, is he still on? It was John Chenicki, who was actually on earlier. He's the one who programmed up the Danshin channel for us for Thinkorswim. He programmed it up for us on Thinkorswim. So I share that with my coaching client. So I have that for Thinkorswim, which I give to people who are coaching clients. Ichimoku is available there, and everything else is available to set up, but the Danshin channel is not. But John set it up for us, so we share that with coaching clients. So everything's available for the ETF options. So all right, so I'm gonna, unless we have anything else, or just email me, call me. All my information's on the handout. It's on the website. And I will go ahead and end this now. Yeah, email me or call me this afternoon. I'm pretty readily available the rest of the afternoon. I'll be around. And I have a lot of free time since I don't have that regular full-time job anymore. I'm very flexible time-wise. So that's why I am able to do this type of stuff. Trading changed my reality. No more sitting in front of in a cubicle 40 hours a week thing. I can go, literally 2 weeks ago, I was on a basketball court with Steph Curry up in San Francisco shooting his streaming series for Peacock. I was a referee for that game. 4 weeks ago, I'm on sets, literally sitting next to Channing Tatum, shooting the movie he was shooting up in San Francisco. And it's fun having the flexibility, but that's all enabled by trading, making me flexible to do all this other type of fun stuff. All right, and until next month, and I'm going to sign off now, and give me a call, email me, and we'll set something up, and we'll see you guys next month.